for joining us this evening for Halter Ferguson Financial's investment webinar, What is going to fuel the next bull market? Tonight's presenters are Tony Hutton and Bradford Ferguson. So this is what is on our agenda for tonight. So Tony tonight is going to talk about a new industrial revolution, increases in labor productivity, and effects of disinflation. Then we're going to hand things off to Bradford for an educational discussion around Matt and Bradford, around global energy investments, personal productivity stories, and AI and employment. So what is a bull market? It's when investors are optimistic about near and maybe even medium-term growth in earnings, which obviously pushes stocks higher and higher. During a bull market for equities, investors buy stocks with the anticipation of stocks prices going up, obviously. And this is just one idea behind a buy low, sell high principle, which I'm sure you've heard either Tony or Bradford talk about in annual investment reviews. Bradford?
Sure, this is taken from our website, hffinancial.com/disclaimer. What you're about to hear tonight is not investment advice. It's not a recommendation to buy or sell any security. We will be talking about some companies, but it's not investment advice.
And that is, if we look at every great bull market in equities, in stocks, we'll find that every last one of them, except for one, is accompanied by a market increase in what we call labor productivity, the amount of output per unit of labor. The unit of labor is almost always a worker. With these various revolutions, we go through periods where labor productivity increases by a lot from previous periods. Well, first, it is important to say labor productivity is very important to corporations, or therefore they're important to stock prices, because as labor productivity increases, we can think of costs generally decreasing, right? And costs are a big part of profits. You got sales, you attract your costs, and generally you get a profit or a loss. Every great bull market has been accompanied by a market enhancement and increase in productivity. If we focus, I'll ask you to focus on two different bars in this bar chart. And the ones I want you to pay closest attention to is that period 1979 through 1990. You can see there 1.5. That means that during those years, it's 11 or 12 years, we averaged 1.5% increase per year in labor productivity, which isn't an astonishingly high number. And then let's look at the other significant bar chart on this, which is the time period 2000 to 2007, that on average every year for those 8 years, we increased labor productivity by 2.6%. If we all sort of just think about it a little bit, what happened from basically 1990 to 07? What happened in between? And you can see that 1990 to 2000 period, that 11 years, was also an increase. Well, probably everybody already has the answer. What happened was the PC and internet is what happened. So PC and internet almost certainly contributed to increasing the rate at which labor productivity grows. What we call this is creative destruction. And a good example of creative destruction is that the internet killed the fax machine. So I think the fax machine became ubiquitous in about 1980. Now I don't know anybody who faxes, or if they do, it's a digital fax, meaning it's done through a PC and the internet. A quick little story here about Jensen Huang, who heads up NVIDIA, the co-founder, CEO of about 28 years. He's a firm believer in what he calls creative self-destruction, which seems absurd just on its face, right? And what Jensen, he's been messaging this to his team, all the employees at NVIDIA, for probably a good decade. what he's telling his team is that if we don't kill a little part of NVIDIA every year, someone else is going to do that. They're going to do the creative destruction. They're going to be the entity that comes up with the next internet that destroys the fax machine. In the spirit of creative destruction, replace it with something more innovative, better, that perhaps can increase labor productivity. Bear in mind, profits drive stock prices in the long term. That's been true, I can only imagine, since they started trading under the buttonwood tree in 17 whatever in the United States. Because of course, the more profits a company earns, the more valuable it would be, right, to own a share of that company. Also keep in mind, for most corporations, labor is the largest cost. So finally, what is the fourth industrial revolution? Well, if you haven't guessed it yet, because it's all over the news, feels like every waking moment, it's this thing known as artificial intelligence, or AI in short. I've defined AI as the delivery and application of contextualized knowledge. Something very important to remember about artificial intelligence, in the same way that I mentioned Henry Ford came up with the assembly line of over 100 years ago. Well, guess what? That assembly line is still used today. That concept hasn't gone because it's so efficient. A way to think of artificial intelligence, we believe that it's what we call secular, meaning it's going to persist no matter what. Corporations aren't just going to stop using this extremely efficient tool because, of course, it enhances the labor productivity. It means, again, it persists no matter what. I went to Merriam-Webster to get a more formal definition than that. And it reads, existing or continuing through ages or centuries, or it could be of or relating to a long term of indefinite duration. So again, secular means it should persist no matter what. Perhaps some of you folks have heard of ChatGPT, generative pre-trained transformer. Now, I would like to say that everything is rosy. Labor productivity is going to increase so much and so quickly. We have evidence that it already is occurring. And I'd love to think that, this is going to be a straight line, right? Stocks are just going to go up because corporations are going to get so much productivity out of their employees, their costs are going to decline, and the profits will increase as a result. But I'm a realist, right? And we all know that that's not how this works. But I do think it's fair that we mention this notion of disinflation. Everybody probably is aware that if we go back, say, 15 or so years ago, we had very little inflation. And then post-COVID, the pandemic, we experienced a very large bout of inflation. In fact, if we go back about a year ago, prices were up about 9% from the previous year. Why am I going into this? Why am I even mentioning disinflation? Again, because we don't think stock prices are going to go up in a straight line. We know it'll be crooked, but we do believe they'll still go up and to the right on a chart. But it is important to note that because we still have inflation, yet not as bad as it was a year or so ago, that disinflation can reduce manufacturers' profit. And that's because manufacturers, they price their product in great part based on what it costs them to make that product. And of course, that means they have to buy inputs, right? If I make automobiles to sell to you, I got to buy the tires, I got to buy the metal, I got to buy batteries, all these sorts of things. So in any event, just know that during periods of disinflation, companies' profits can decrease. Now, and this is especially true for manufacturers of physical goods, different than services. I'm going to reinforce and re-emphasize that if we go, a slide or so earlier, I made mention that artificial intelligence, AI, is secular, what we call a secular trend. It should persist no matter what. That's great news. The bad news, of course, near term, is we're seeing this effect of disinflation, meaning it can hurt profits of corporations, especially those which manufacture things. But there's also a piece of good news with this, in that, unlike artificial intelligence, which is secular, disinflation we expect is cyclical. And that's just a fancy word we in the industry use to mean it's not long-term generally. It tends to be short-lived. Okay, it runs in a cycle. When, eventually we'd like to think that inflation will come down back to those super low levels we were experiencing about 15 years ago. And that could be any day now, it could be a year from now. Nobody actually knows. But the important thing to know is we believe the period of disinflation, which can hurt manufacturer profits, is going to stop one day in the not too distant future, whereas these wonderful benefits from artificial intelligence should persist long term. When can we expect a bull market? Well, artificial intelligence, the AI trend, which is secular, is in place. We already have evidence of it enhancing and increasing productivity. Pretty good evidence since about 2017. Some quick examples would be if we have any streamers, any people who watch, let's say, Netflix or maybe Amazon Prime or other streamers. For instance, Netflix has 232 million subscribed streamers as of about 3 weeks ago. Well, every one of them gets recommendations on what to watch, right? And in my experience, at least, they've been really applicable to me. They've been relevant to me, and they compel me to watch more Netflix, quite frankly. So that's an example. That's being run by AI. Could you imagine if you had to hire employees to provide recommendations for 232 million people? Not to mention, I probably get 4 or 5 per week. I don't think that would be reasonable to be to have an expectation that that could be done by humans. That's an example of AI. The actual timing of when we reach a new high and perhaps see a true bull market, no one can tell you that accurately, at least not consistently. I would frankly argue that we have some evidence for that even today, without having achieved a new high in, say, one of the major indices.
I would like to introduce our newest member to our investment management team, Matt Smith. Matt is Vice President of Equity Analysis at Halter Ferguson Financial. Matt graduated with a Bachelor of Arts in Finance and a Bachelor of Arts in East Asian Languages and Culture from Michigan State University. He received his Master of Business Administration from the University of Michigan Ross School of Business. Prior to joining Halter Ferguson Financial, Matt was a managing partner at Good Soil Investment Management, which was a hedge fund focused on disruptive innovation. Matt also has extensive experience in the energy industry and spent time working in valuation and investment banking earlier in his career. Matt and his wife, with their 6 children, live in Michigan, where they are actively involved in their local church and enjoy spending time with their families. Matt, would you like to say a few words?
Yeah, thanks, Anne-Marie. I'm really excited to be part of this team. I've actually known Bradford for a few years now, and it was clear from the beginning, the first time I met him, that we really see eye to eye on investment strategies and the kind of interest that we have on that front. But what I think has been really interesting and encouraging to see since I formally joined Halter Ferguson is just how much Bradford, and really by extension the entire Halter Ferguson team, cares deeply about helping investors to achieve their goals. So that's been just a great experience and something that I've really enjoyed working on so far. So I'm really looking forward to working with everyone on this panel, and more importantly, with everybody that we're serving here in the attendee section. So thanks so much for listening today. So I'm going to just interject here for a little bit to go over an example of some of the stuff that Tony was talking about. Specifically, we're trying to figure out when is the next bull market. Short answer is that nobody knows, but we can look at a couple hints and try to learn some things along the way that'll hopefully make us better investors. What we're looking at here is the energy industry in particular. This chart is a chart of it's a CPI component, so inflation component of the delivered cost of electricity to all consumers. And so the trend you can see over the last 10 plus years is pretty consistent. It's just always up and to the right. And in the last couple of years where we had this big bout of inflation post-COVID, the inflation level has been particularly elevated. So this has been something of an industry-wide, what we'd call heuristic, or just a rule of thumb that energy prices are always going to be up. Maybe 2 to 3% a year on average, maybe a little bit more in periods of extreme inflation, but companies can kind of count on that. But what we're seeing, if we move to the next slide, is that there are some changes in the technology landscape that are starting to put pressure on those old heuristics, those old rules of thumb. So what we've highlighted here in this graph is the cost of solar to install or the average cost of electricity generated by solar. So back in 2009, solar was $359 per megawatt hour, by far the most expensive form of electricity that you could generate. And so if you're standing in 2009, you might rightly assume that solar doesn't have a good future and that the old 2% inflation that we've seen in the sector is going to continue for the foreseeable future. But what we saw is that instead, as companies started to develop solar a little bit more and the technology improved over time, it became better and better. And then, by 2011, it started to become cost effective with some other forms of generation. And at the point where we are now in 2021, for example, it was actually the lowest cost form of electricity out there. So if you look at how huge of a change that is in just over 10 years, just over 10 years, to essentially have your cost of your product get cut by 90%, and to think of the implications for that industry where you've undercut all these existing technologies, it's really severe example of what can happen when a technology comes and disrupts the space. And so I think we still are in this situation where a lot of the industry is kind of assuming that, well, even though solar is more cost effective now, it's still small, and they can still think of 1,000 reasons why it won't continue to gain market share. So what we're looking at now, instead of the trend of over time, we're looking at a kind of a snapshot of where we are in the current state of different technologies. So at the top, this top section, you've got several different combinations of solar, like large scale versus small scale, and then there's some wind in there. And the bottom four are what you would call the more traditional, more conventional forms of electricity generation. So gas peaking plants, just a peaker plant you might have heard, it's very expensive, not run very often. Nuclear is incredibly expensive, and then coal and gas combined cycle, which is just the most efficient type of natural gas power plant. What we're seeing now, though, is solar utility scale, if you look at that as the third from the top, is $24 per megawatt hour. So it's undercutting everything out there. But what's even more interesting is if you pair that with storage, so the next one down, solar photovoltaic plus storage at utility scale, you're still at the $46 per megawatt hour range, which undercuts almost all of the other conventional technologies. And what's interesting about using batteries is now you don't have to worry so much about the fact that, solar is only working for 8 to 12 hours a day, so you can't really rely on it for overnight needs. There's 1,000 reasons why people kind of poo-poo that technology and say it won't scale. But even today, solar plus storage is undercutting almost everything. And the really interesting thing about that is this cost, all these figures that we've shown so far do not even include the cost of transmission and distribution, so transporting the electricity from where it's generated to where it is ultimately used. But you can put solar in a battery pretty much anywhere, and so the implications for saving not only on your generation costs, but also on your ultimately delivered costs are really quite staggering. And so the counterintuitive conclusion from all this, at least if you're using the industry heuristics or the industry rules of thumb, is that the up-only prices that we've seen historically, that most of the industry still expects even today, are really coming to an end. And so to Tony's point about inflation becoming persistent, and companies' earnings being a big gauge of where the markets are going to go, these new technologies in the energy space are going to be they're going to create investment opportunities because they'll help companies to become more efficient, they'll lower costs. And I think even within specific investment opportunities, there will be some companies that really take advantage of this in a unique way and can deliver outstanding value to their customers. And so if you can spot those types of companies, they can create really outstanding investment opportunities. So with that, I'll hand it over to Bradford.
So it's all about cost, but let's talk about safety. The average car in the US fleet, there's an accident 1.5 times every million miles. Even for Teslas where people turn off the active safety, you actually have to go in the settings and do that. 50% less likely to be in an accident. If you look at autopilot on the highway, it's 90% less likely to be in an accident. This is substantial. Tesla is utilizing real-world AI. Their self-driving software called FSD Beta is growing at an accelerated rate. They are buying supercomputers from NVIDIA and using that to bring in the data from the fleet and train their the neural net on their cars so that they get better over time. I've experienced it getting better over time. It still struggles with roundabouts though. They're also using AI for a humanoid robot. This is not a stunt like Sony or Honda, their robots, or Toyota's robot. They intend to use this robot in factories. Factories and everything we're around are designed for humans. So they've designed this robot to be humanoid. Why this guy is really excited is this is the first time they were able to get the robot to see where something is and to figure out how to grab the object and pick it up. They'll now be able to train the robot on numerous things, and they already have it doing interesting tasks. The total investment for clean energy, which is low cost, and for EVs, which are low cost, like the Model 3 is larger than the Corolla and it's the same cost. So it's essentially better on a cost per size. Total investment is $10 trillion. This is going to matter. Tesla's playing a big part, but NVIDIA is helping to fuel them. Tesla is not unused to investing in infrastructure. They've been investing in their superchargers for a long time. They have really good uptime. I've traveled to New Hampshire from here. We've traveled to South Carolina and Florida, and the charging experience is generally good. It does slow down trips a little bit, but the flip side is we never have to go to the gas station. So I want to share some personal productivity stories here. There's something called ChatGPT, that stands for Generative Pre-trained Transformers. Basically what they did was study the whole internet and books, all kinds of things, even fiction, and train a supercomputer on that. So when you ask it questions or interact with it, it produces a very interesting interactive output. And I asked it to brainstorm ideas for a story that's never been told. So this was not productivity for me, but I was experimenting with it and learning its strengths and weaknesses. So it created an outline for a story. And then I asked it to go a little deeper and outline a 3-act novel. Then from there, I had it flesh out the characters and then begin to write the story. I was just blown away by it. Certainly there are some frustrations, there's some things it wants to do when it writes, but I learned to work around those weaknesses. We're using it to boost productivity at Halter Ferguson Financial, using it for research. So I asked it, what's the difference between silicon carbide and gallium nitride? And these materials are used in electric vehicles and solar panels. So it gave me an answer. You have to be careful with some of these. Sometimes it's not truthful, but it doesn't express any doubt which can be an issue. But it gave me an answer that satisfied me, and it seemed to jive what we know. What is awesome about this is if I was to go to a web search, a traditional web search, it would suggest a bunch of web pages. I'd not be really sure about which one to select. And when I go to these web pages, I'll get a paragraph and then a giant ad, and then one more paragraph and then a giant ad. And the useful material might, if I'm lucky, be somewhere in the middle. So we're getting an answer without ads, and a really good answer. I think all of you all who are joining us should consider experimenting with ChatGPT a little bit. It's very useful. I think where the internet is going is there's going to be these portals where the information is going to be so valuable, you're going to want to stay on the portal. There may be some ads there on the portal, or maybe you pay a monthly fee to use it, but you'll just kind of stay there so you don't have to go anywhere. Then I had it help me on a project where I had a ton of files, nearly 3,000 files. I've not really programmed seriously. I'm a if-then programmer in Excel. Programmers would understand that's pretty basic. And what it did was it talked me through the problem, told me how to install the software, and then it started writing code for me. The real challenge with these is to be able to tell it what you're wanting it to do. You can do it for more fun things, personal assistant, helping me stay on task, reminding me to have green leafy vegetables and drink water regularly. You can use it for event planning or brainstorming. But again, the collective knowledge can be wrong. It's what the internet believes, and the internet isn't always right. I think this is great for, it could be an author, a coder, a professor, a consultant, a personal assistant, can brainstorm for you. If you're not sure how to use this, you can just ask it, how can I use you? And if none of its answers you like, you can say, what are 10 more ways that I could use you in my life? Here's what I like. And then it'll tell you the interesting use cases that it can help you with. So there's been a lot of fear in the media about AI recently, and it kind of seems like eventually we're going to merge with the machine, kind of like Elon wants us to with Neuralink. We've had our phones, we have our computers, and we already use them as a personal knowledge assistant. So we already kind of are cyborgs. We already are using AI, as Tony's shared with us. People worry that AI is going to either take our jobs or eventually destroy us. It seems like a Pandora's box, and what people are worried about is that we go in, we accelerate toward this AI future, and then once we get there, we can't go back. And certainly it's very intimidating. It seems like a maze of information, websites, different tools. When we share the recording from this, we'll share a couple websites that you can go to, but just let creativity and curiosity be your guide. I believe that ChatGPT and other language learning models, AI, and other types of AI is already increasing productivity for corporations. If people are just finding different ways to use it. Now, some companies are banning their workers from using it, while others are a little more permissive. I think AI is going to pull us together. It's going to link information faster than ever. And while that can be scary, I think it could actually be a good thing. I'm an optimist. It could be used to help us relax, help us learn, help us unwind. I use AI for leisure. So it seems like we're accelerating toward this future. I'm a generalist. I'm not a specialist. And I was able to do this with very little training. This work that I did wouldn't have been done otherwise. Maybe I would have had to pay a specialist $300,000 a year or something. But I could do something as a generalist. I can bring on other generalists to help Basically, you need them to be creative and you need them to be wise to understand the strengths and weaknesses of the tool and when it's starting to kind of fail and you kind of need to restart. I was able to do this programming task in 6 days. Probably if I hired a consultant, they would have taken a couple weeks to get back to me, just kind of as a standard practice. So I think what's going to happen is companies are going to hire more people. I don't think it's going to cause job losses for a long time. What I see is like, if your revenues are here and your costs are here, I see AI pushing down your costs and increasing profits. This is why we think AI is going to help drive the next bull market, but also this huge investment, this $10 trillion investment is going to be made in clean energy and EVs. What we're looking to do is figure out the companies who will benefit the most. We want to buy at the right price, of course, but we're going to be focused in on where we're starting to see their costs come down, their profits go up. That's what we're going to be looking for. I should have said earlier, those colorful images you saw were all made by AI. I want to share something about NVIDIA because there's some news today. Can you stop sharing your screen? NVIDIA's in the news. They just guided that their revenues are going to be 50% higher the next quarter, which is an enormous rate of growth. And what I'm saying here is even Tesla had to buy an NVIDIA supercomputer with their latest purchase. Tesla is trying to make their own computers to use, but they weren't ready. Elon, frustrated with OpenAI, had to buy an NVIDIA supercomputer to start to crunch things for Truth AI. And Facebook was funny as they bragged about their newest supercomputer, but it turns out under the hood is an NVIDIA hardware. Tony identified NVIDIA for us, and he's been, like he said, has been a long-term investor. So thanks, Tony. Tony's kind of floating today.
Yeah. Thank you for the announcement, Bradford. And yes, NVIDIA had quite the earnings report. Believe me, we're happy we have it in your portfolio.
Yep. Now's not the time to buy more. Okay. So what we're looking for with companies is a quasi-monopoly where customers have to buy the product or the company is able to make the product at a lower cost. In our opinion, this investment in AI isn't going to stop because it boosts productivity so much. Businesses want to get there first. And that means they're going to invest in NVIDIA supercomputers. And what this means is the level of compute out there with supercomputers is going to reach the level of zettaflops. So the biggest supercomputer right now is like around exaflop level, and a zettaflop is 1,000 times bigger. So like collectively at a minimum, we're going to get to zettaflops, and NVIDIA is the main provider of that right now. They have the biggest community of bought-in developers. They have the most number of engineers for their products, and they're a must purchase by many companies like Tesla. There's been a lot of tech layoffs. We saw that with Elon. He fired 75% of the employees at Twitter to get them on a level footing financially. Other tech companies have done that, but now that was in the fall and back here in the fall. So in March or so, that's where this ChatGPT came out. Language learning models got way better. So I think there's going to be a flip where companies are just going to start hiring.
I'm going to conclude this presentation with the latest photo of our team. And on behalf of each one of these individuals, we just want to say we thank you, our clients, for allowing us to continue to serve you. And we look forward to continuing our long-term relationship. And we hope, thank you for attending, and we hope you got something out of this. And if any questions arise, feel free to email me, AnnMarie@hffinancial.com, and I can get an answer for you. But otherwise, have a great night, everybody, and thanks for joining again. Take care.
Thank you.
Yep. Bye for now.